right, all right, all right. Spend time with parents, it's awesome. Family first. That's awesome. I don't know if you guys can see my screen. Drop a 1 in the chat if you can. Awesome. One more person if you can. Awesome. Perfect. And you guys can hear me all clear. We are recording. So very important you obviously read the disclaimers inside of the 2 Degrees Discord. Everything that I'll be talking about, of course, is not financial advice. It's for informational and educational purposes only. I'm merely sharing my opinion. I hope that you guys are all mature enough to understand that the markets are very volatile and you should be trading responsibly at all times. So good to see you, Ubaid. I appreciate you sending us a nice, kind message like that. All right. You guys know the drill. Starting out a weekly chart. It's Monday. If you guys have been following the live streams for a minute, I'll just go very briefly over again what's been things that I've been seeing. So this to me is a larger consolidation. It might not look like a consolidation to you, but again, this is the bulk of it right here. So that's the main consolidation. This is stage 1, and this is stage 2. We basically got a smart money reversal here, and there was a low risk sell at this order block that we talked about in our weekly analysis. After that happened, we were basically going and working this mean threshold of this candle right here, which is the stage 2 of reaccumulation relative to this larger buy model transitioning into a potential sell model. And after we rated this previous weekly low and we hit the mean threshold, anything that was going to be below this was going to basically cascade liquidity where to these recent lows that are here and basically inside of this inefficiency. So when you go and look at liquidity being ran, after liquidity's been ran, you want to say, okay, well, where is it going to end up? If there's nearby liquidity pools like here, this can be a target after potential flipping of fair value. So whenever you look to rebalance from liquidity being taken, you want to say, okay, am I rebalancing in an area of fair value, or am I rebalancing where there's a like shorter distance away from liquidity? In this case, from here to here was a pretty large distance, so it would make more logical sense for price to basically sweep liquidity and then come in to rebalance. So drop a 1 if that's all clear to you guys so far. That was just basically a small recap of what we did, but I will annotate it a little bit nicer over here. So these are the stages of the market maker buy model transitioning into a market maker sell model. So Yoshi, it's probably you. I've heard some other people confirm that they can hear me. So good morning, Tony. It's great to see you in here. And Keith, good morning. But yeah, this is pretty much what we're looking at. And this has kind of been the narrative that I've been following for quite some time now. So I'm gonna remove that for right now, and I'm just gonna mark out the relevant liquidity that was taken. Just so we have it. So it's pretty much the framework right now. I am interested into these lows, but at a specific time when we look potentially to flip this fair value gap. Until we flip this fair value gap, it's not necessarily going to be an interest to me. So you guys can see that these are obviously relatively equal, but as a very distinct understanding is that obviously when we have liquidity that's already been taken from a recent swing, these are high resistance lows to me. So even though this is basically the sell side liquidity pool that's left to be taken, there has been a liquidity pool that has been ran just before that. So when we get to a little bit more of this recency of price after we potentially flip this, then I'm going to look to mark out the CE of this candle, and that would be the first objective to monitor order flow during that case scenario. So I'll just show you what that looks like. That's like here, and then I'm going to also do that here. So these two areas of price are going to basically just think of them as like speed bumps. So if there is a meaningful imbalance here, that's going to give me some sort of alignment. So like on the weekly, probably be looking at either a 4-hour or daily sell side imbalance through these levels, then that would give me more confidence to run this liquidity. Otherwise, if there isn't, or there's an inverse fair value gap that comes around here, then I would look to see that there's going to be possibly a retracement back down to the lower end of this fair value gap, or just shy of it, and then potentially go and continue lower. So that's the higher time frame narrative of how I'm viewing price right now. We'll go to the daily chart. So you guys can see here that basically we had this up close candle here, right? It ended up being worked with a propulsion block. We have a fair value gap here. And then this is basically starting another consolidation. You see this box of price. There's another fair value gap after breaking this consolidation. And they basically just retested this fair value gap here on Thursday. So right now, again, very clearly understanding that I am looking at a retracement program, but I cannot be full on bearish until weekly discount arrays have been taken out. So right now you can see that they are running previous daily highs, and then they're looking to come off of them. So that's something that you want to be able to annotate, right? So it's a sign of bearish institutional order flow. Right now, the Friday high is pretty close, let's say. So I'm going to see if they can continue that same understanding. And you can see also the closing price to this candle and the opening price to this candle. This is going to be basically a new day opening gap. So if they look to take out liquidity, right? After you run liquidity, you want to go into an inefficiency. If that's the case, then that's going to be basically what I'm looking at today. If they fail to run this, then they flip the open, then I'm going to be pretty convicted to say that we're going to either look to test this closing price on Thursday. So that's kind of the two scenarios. I don't have a strong conviction of one or the other, but opportunity one, and then basically like this, or basically going in, flipping the open, and then basically going down just to retest this closing price. So those are the two scenarios I'm looking at. What's going on time? And you guys can see right here, you can see the respect on the 4-hour to this weekly fair value gap. So it's pretty strong to see that like as an algorithmic signature. So just to measure the low to high over here, again, they haven't even retraced to 50% yet. So I would see that that would be also a first level objective of what's going to be going on before even making a leg lower. You can see here is the current new day opening gap. And look at the body's respect right there. So that's pretty strong. Again, when you see that 4-hour respect and then this, until these are broken, I'm basically in a mixed bias. So you should be aware of that. I'm going to take out this because I don't like it right now. All right. Does anybody have any questions based off of the narrative as of right now? Appreciate your time. That was kind of a rundown. If we just go real quick back to the weekly chart, you can see again, we talked about these being high resistance. These are my speed bumps. Right here, this is the fair value gap that basically got rebalanced. There was 4-hour respect there. and then we kind of have been going into bearish institutional order flow as of right now. We do have weekly sell side that was been ran, and on the daily chart, they're running previous daily highs and going to raid the lows, and we have not reached into a premium yet. We did open up higher for that new day opening gap, and this would be basically a first objective if they do want to rebalance. And again, if they flip the daily open and the current new day opening gap, then I'll look to be looking to retest the Thursday closing price. What time frame are you looking at those relative equal highs, Green Reaper? Five-minute. Yeah. Definitely an option. Like I've mentioned over here, price did not retrace into the equilibrium here. So until that pretty much changes, like there's still a short-term bullish bias given the algorithmic signatures here from the 4 hour bodies relative to the weekly fair value gap, as well as the 1 hour bodies for the current new day opening gap. So until those are basically broken, yeah, I'm still looking at a higher draw. Okay, perfect. All right. Yeah, so that's pretty much what we got right now. I am looking at this as well, which is basically our developing RTH gap. You can see from the data table here, there's been quite significant RTH gaps recently. So this is a feature right here that you can see that says show developing RTH gap, which is basically tracking the closing price, right here on Friday. And basically from here to the current trading, like last closing price of the trading candle, this is going to move up and down. So it just kind of gives me a understanding that we're opening up higher. So rebalancing this is always a, let's call it a decent framework to look at the 9:30 open. It's really rare that there's going to be less than like a 1 to 5% fill on any like RTH gap. And if it does do that, then it's going to really signal a lot of aggression during the opening range. So it's something I do like to look at. It's on the charts. And you guys can see right here, again, closing price, RTH right here, 415. Ran up, rebalanced. There's a fair value gap here. They couldn't get sponsored to get lower. And then that basically started to get inverted. And now basically the current daily high and the London high are going to be looked to ram where we are right now before the open. All right, let's go over here. You guys know that I'm a big fan of time-based liquidity. I really like this. One of the best frameworks, in my opinion, to understand relative to the day. Anyone that's been on previous streams, they know that on Monday, and specifically from the Sunday new week opening gap, I like to see how the strength is comparatively. So you can see that this is basically the gap opening today. This is the gap opening. This is the gap opening, and then this is the gap opening. So if you guys can see anything, which one is the strongest pair as of right now as it relates to the gap? So you can clearly see that it's probably Nasdaq. So we have unfilled areas in that new day opening gap. And if you take a look across my screen with my cursor, you can see that S&P has filled it. Dow has filled it. And Russell has filled it. Drop a 1 if you're still with me. I know we talked about a decent amount as of right now. Okay, awesome. There's 3 people that are with me right now. 4. You get a quick sip of water. 5, 6, 7, 8, 9, 10, 11. That's good. Okay. So you guys can clearly see that this new day opening gap relatively speaking, Nasdaq is the strongest. So that's a clear signature and price you want to note. And then one thing that we always talk about again is look at the London liquidity. Those are some pretty bad circles, but you can see the London liquidity. It was only ran on Nasdaq. So we've mentioned this before. There's SMT protocols that I've talked about in previous streams. Is that when price basically raids out a time-based liquidity and others do not. I like to personally look for fair value gaps on the pairs that don't break it, and then the pairs that do break it, I want to see any fractal nature of a raid. So in this instance, this is the most clear and obvious to me. Your institutional flow entry drill right here after the time-based SMT here. So at 7:15, basically looking at this fair value gap to raid the London high, that is a potential trade that abides by the SMT protocol. Same thing right here on the Dow. So you guys can see that. That's stuff that I've talked about before. And then if you go to Nasdaq on a 5-minute chart, you can see that this is the London raid right here. And then there's a short-term low here that gets ran out right there. And that's that fractal raid. And they also have one more right here. So you have the raid from the pair that makes the high resistance lows right here. So during this time again, if you were to look at price, look at what the S&P is doing. It's holding this, right? See that? Holding its structure again right here. You also have a lower time frame fair value gap that could have been used to get into the sponsored trade as well. And you guys can also see in fair value gap here on the Dow, that 5-minute. So is that clear to everyone? You guys can see over time that SMT protocol is gonna be pretty important to monitor. It's gonna keep happening. Drop a drop a 2 in the chat if you haven't heard about me talk about the SMT protocol. If you have not. Okay. 1 is enough. So I'll just go and briefly talk about it right now, just because we got a couple minutes. Pay very close attention. This is something that's going to repeat, and you can see it time and time again. Okay. So let's say this is your time-based liquidity, and we're just going to be looking for a bullish example, right? So I'm going to mark this out in black. And this is going to be basically your liquidity. And this is pair 1. I'm just going to call this asset instead of pair to not confuse anyone. So these two are correlated assets. And really what you're going to see is in this example, price is going to look to come down and raid the time-based liquidity. And if you guys will notice, like when I do this, this is a good exercise for you guys to do as well, right? So you're going to see the similarities right here of what I'm talking about. And it's not going to look exactly like this. So you're going to have to obviously have your own degree of understanding on what you're looking for, right? But asset 1, you guys can clearly see that the time-based liquidity is ran, right? Everyone's with me on that. I want to make sure this is very interactive and also understanding for everyone. So if you can, I'm looking at the chat constantly. So if you guys can give me some live feedback, it really does help me out. Okay. So, all right. So everyone can understand that this runs the time-based liquidity. It's a very simple thing, right? The the asset that runs the liquidity will be looking for a fractal rate in price action. Come on, TradingView. And then for asset 2, the asset that fails to run the liquidity, I will be looking for a fair value gap to sponsor the string. Okay, so really, again, all that looks like is this right here. So this is going to be that fractal raid. And then here is going to be the fair value gap. Here can also be a fair value gap. All right. So as clear as I can make it, this is literally what it is that I'm looking at. And basically here, the asset 1, this will look to have high resistance liquidity lows. I would see those lows affected. Okay. And then these lows are going to generate failure swings that once price takes out an opposing liquidity pool, these could be a target for a time. So really what I mean by that is basically, let's say price goes and takes out time-based liquidity here. And let's say it does take out time-based liquidity here as well. Clean this up a little bit. So the moment that price does take out this time-based liquidity, we do have a market structure shift. So then price starts to head lower, right? These are going to be low resistance liquidity run lows, which means that when price looks to take out this first low, I expect a cascade of price. What I mean by that is basically when one area of the liquidity is taken out, because we have very close nearby liquidity pools, these should all be taken out, not necessarily in one candle, but in a more aggressive run than when we start to go and head down lower here. This can go over here and do some speed bumps, right? It'll look like this. See what I'm saying? So this as a whole, let me just move this over. The difference in what you're going to look at is that this will be a sharper move lower, right? This will have these speed bumps because they're basically stopping at any fractal raid, and when liquidity's already been taken out, these pairs are going to really start to pick up in their delivery. So there's a lot of information here on the chart, and I'm happy to answer any questions. We've got 8 minutes until the open, so let me know what is unclear and what we're going to basically be looking to understand, because this exact protocol happens at least 3 to 5 times a week, depending on how in sync assets are. But typically you're going to see this happen at least 3 times a week on time-based liquidity. And this is a protocol that you can backtest and study, and don't take my word for it. Go and look at it inside of your charts. And if you want to understand which time-based liquidity pools you're looking at, ICT's video, the One Setup for Life, that's an absolute amazing video. I definitely encourage everyone to watch that at least once. And again, if you don't want to even watch it, Then you go to the liquidity depth, and you can see that these times right here on my info tooltip right here, you see that Asia is 8 to midnight, London is 2 to 5, New York AM is 9:30 to 12, lunch from 12 to 1:30, and New York PM from 1:30 to 4. So for gold, I know that there's some differences in what different analysts and traders look at for their correlated pairs. I've always looked at gold and silver specifically, but I know that T-Trades, for the T-Trades fractal model, it looks at XAU euro, which is basically gold denominating in the euro pair or currency, as well as XAU GBP, which is the British pound reading for gold. So that's going to be your own experience. Do it. And I'm sorry if I'm not pronouncing your name correctly, but my specific point is also saying like this is one way to measure like strength in the assets, right? But again, you saw how the fractal raid happened today on Nasdaq, right? If you have a strength leader and you have more strength signatures, then I personally like trading the fractal raid because these lows are generally going to be protected that once price retraces. If this doesn't basically get taken out, then you're going to see that continuation higher. These give more susceptible nature that if you do trade this with a fair value gap, that like basically trailing your stop is going to be smarter on this asset. Because if there is a cascade of liquidity, then you don't want to be holding the trade in as regards to this, because these lows are very, let's call it hot. They're like landmines, right? So like once one low is taken out, like it could just trigger more landmines to run the original low or consecutive lows. When you see this again, if you do have more strength and let's call it correlated analysis supporting this, then typically speaking, these are going to be protected lows. So you guys can take a screenshot of this. I'll drop one in the chat and just study it for yourself. Like this is a very simple understanding of how to view SMT. This is basically the SMT protocol. So we'll go over here and look at this again. We'll go to the 5-minute. So you can see again, you have London low here, London low, London low, London low, and then after that lesson, you guys can clearly see that there is a swing low here. This is the fractal raid. There's another fractal raid here, and during that same time, you can see that these lows right here are being protected. And you see this fair value gap right here, and that gets sponsored. You have fair value gaps here, that gets sponsored, fair value gaps here, that gets sponsored, and then eventually looking to raid out the London highs, right? So if you guys have any questions about that, let me know, but we do have 3 minutes until the open. And I do want to cover the opening range because that is something that's also very important. So for everybody that's not understanding about this, this is a free tool that we have. It's called the 30-second opening range. You just basically get this by participating inside of our Discord. So that is something that you guys can look at and understand. My screen's lagging a little bit. Hopefully you guys are still hearing me. What does sponsored mean when talking about SMT? So like, I'm just saying sponsored as it relates to the fair value gap. So that displacement in terms of a 3-candle pattern is going to show me. Sorry about that. So the sponsored, what that means is very specifically is that if they're going to protect those low resistance lows, then I want to be able to see a fair value gap hold as it relates to that liquidity being shown its hand, basically. So when I say that sponsored, like I want to see the sponsorship in relates to a fair value gap. Does that answer your question a little bit more? Okay, cool. All right. So you have 30-second opening range. This is the first 30 seconds of 9:30. This is what I personally look at. It's a concept taught by Pax. He was a floor trader of the Nasdaq when prices in the open outcries, meaning the actual floor trading. Just looking at this very understandingly, we have basically Friday's opening range right here. And you guys can see that there's also SMT here. In the same protocol. Again, want to see a fractal rate in price. This is the next rate in price that you see. You can confirm that with the IFEG here. And you guys can see that there's a clear imbalance here that was respected on S&P. So that's another example of the SMT protocol. But anyways, we got like 30 seconds. You can see that there's going to be a little bit more speed bumps here on NASDAQ than it relates to S&P. S&P, if we open above here and even open up against this high, which is kind of unlikely in the next 30 seconds, it would just definitely give me a lot more room to target this next opening range. There's speed bump 1 here and speed bump 2 here. And what I mean by speed bumps is, again, like price can just retrace here and then look to go to the next ones. So like that's how I view the opening ranges. They're just basically pivot points. Like I would want to see price pivot at these levels. And once you study this and kind of see what I mean, you can see it here. Like these are basically speed bumps, right? Speed bump, speed bump. And you can see here and here. So we just opened up. So right now I do favor NASDAQ being a little bit more contained. And what I mean by contained is, again, until we start clearing any of these 30-second opening ranges here or here, it's going to get pretty bumpy. Let's just say it like that. And then if S&P basically wants to have any great deal of speed above this high or this high, then it definitely gives me a little bit more conviction and upside on S&P. We also did basically open up right at that weekly open, which is pretty significant. So as I've kind of mentioned this before in like different ways that I view a short-term bias, I want to see the 30-second opening range and the weekly open be in agreement. So what does that mean? Specifically means that on this opening range and this weekly open, if we're above both, which is basically from here up, I'm going to favor longs. If we're below the 30-second opening range but above the weekly open, this is going to basically give me a consolidated understanding, right? And if we're below both, right, which is here, then I'm going to be short-term bearish. So that's how I view the 30-second opening ranges. And you guys can see clearly on the weekly open here. So I'm just going to mark this out as well so you guys can understand. This is how I view a short-term bias. So hopefully that makes sense to you guys. It's really, really mechanical. That's just a way that the bias keeps me on side. So basically the idea is that today's direction and amplitude in New York open is linked to the previous day opening ranges. I don't really know how to answer that question. Just pure honesty. I don't know how to answer that question. The idea is that today's direction, amplitude, and New York open is linked to the previous day opening ranges. I wouldn't say that it's the amplitude. I don't know how to answer that. I'm sorry. I don't want to give you wrong information that I don't feel convicted about. I look at the opening ranges as speed bumps. Yeah, I mean, these opening ranges are also going to still show respect during like non-New York open. Like this could still be in the PM session, right? Like you can see this PM session. So it's not necessarily just the first hour. Yeah, price might stall speed bumps. It's either gonna reverse or retrace at those levels, and until you see larger degree of confluence, then it's gonna be harder for me to basically just say which are another. So Nasdaq is looking to get above both of them here. This is the what is this, Wednesday? Yeah, Wednesday's opening range. If we close above this and then we retest the low of this, then I would say that it's going to look to start to just pivot up. But I do favor ES being the cleanest on the upside, because you guys can clearly see that there's like the speed bumps are very obvious here, and they're older, right? So these ones right here, I have them extended out for 3 days right here. The last 3 days on these opening ranges are going to be a little bit more important to me. So Nasdaq is still showing that strength that we talked about here, but again, this is still a little bit surprising to me on the open, as I would want to see basically this to be a little bit more contained and this to actually be giving the Nasdaq's let's call it velocity. Yep, you got it, Ubaid. Pretty decent move already on the open. Does everyone understand these blue, gray, and red boxes? Next level of speed bump is basically pretty much here. 06, 27, 49. So yeah, I mean, we keep everything pretty simple, mechanical. Um, Everything has a protocol. I don't really have so much more to say other than just reading lower time frame order flow, but you guys kind of had the plan um, and the annotations that are understood, right? So you guys can clearly see that we saw this new day opening gap. It tipped us on rating the London low, and then there was basically just sponsorship on ES, and basically just ran out current day high, London high, and we're above 30-second opening range and weekly open. So I mean, I don't really have much else to say other than now just watching lower time frame order flow, and like we can read candle by candle. But you know, you guys already kind of had the playbook, and you'll see that it's the same thing over and over. I'm not changing anything. I look at short-term bias, I look at time-based liquidity, I look to measure strength leaders, and look at a higher time frame analysis. Do you have a specific question? And do it on the daily or weekly chart? We can review the speed bumps real quick so you guys can see what I mean by that. Oh, I see. We're well above the EQ of the 4-hour range. I can show you that here. And just because you're above inside of EQ doesn't mean that, and this is a really big mistake that I've also made as a beginning trader. Just because you're above this doesn't mean that you're bearish, right? Like you still have to see order flow signatures that will present to basically show you that price would want to reverse inside of a premium. Otherwise, you just want to continue order flow. Like you don't want to pick a level here based off of Fibonacci that price is going to basically just reverse from without an actual like algorithmic signature that shows you one way or another. Anyone else have any other questions? And very specifically, in terms of an understanding, is that Nasdaq breaks this low right here. I will absolutely go into saying that I don't know. Same thing right here. This is the gray area, as very clearly as what I'm saying. This is the gray area. And actually, this is marked incorrectly. This is supposed to be like this. There's a weekly open in the 30-second opening range right here. So this is actually, this will give me short-term bearishness. This is the I don't know. Apologize for that mistake. See if price wants to pivot here. S&P is now showing a lot more weakness as it relates to Nasdaq. But this is also, when you say like, oh, Josh is right or wrong, like I've been more wrong as of right now in relation to the strength and what I wanted to see, like in freedom, basically to trade the S&P. Like Nasdaq showing me more signatures of that strength. I mean, I'm definitely not going to be perfect either, so hopefully you guys can appreciate that. I'm just reading the market as I see it. So there's another speed bump right there. So these are like when you see the reaction here and then here, these are smaller scalps that someone could look to engage in, but that's not necessarily everyone's, let's call it, trading style. But you guys can see a pretty nice example here of how price just pivoted from the high there and then just went like that. So and Nasdaq's moving, so like that's 72 points in 2 minutes. So just please be mindful that volatility is very real, and if you're not properly positioned in your own leverage, these are absolutely conditions that can hurt you. Yeah, price is definitely whipping around. Volatility is very high right now. We're basically just watching price. Like there's no other way for me to look at this. Definitely noticing that S&P is indeed weaker. Mentioned that when we were basically here. Nasdaq is holding up a lot better. It could be coming for a sweep here based off of this price action that I'm looking at. That's going to basically produce a short-term S&T here. But this is a clear signature in price. See this fair value gap? They didn't sponsor it. They came back up, and there's a new fair value gap right here. So that's a sign of weakness to me. Now, basically, until this high is taken out, I would say that S&P is definitely weaker. So you guys can see what I'm saying here. Again, these are very reactive, especially in high volatility. And I know a lot of traders that'll just basically trade the opening range breakout as it relates to this. That's pretty much when this range stops forming, and they simply just buy above this, and then they manage their risk accordingly at the 930 low. I know some traders that also use 50% as a refinement. They'll miss some entries, but they get a better risk reward. So it just kind of depends on your personality as it relates to, do you prefer a higher win rate or a lower win rate, and do you go for higher multiples or lower multiples of reward to risk? Does anyone else have any other questions? Awesome. So if Nasdaq breaks this low, I'll probably go into the understanding and tell you guys that I don't know. And then this is pretty clear as well right now for me to say that this gets ran one more time, they're very likely going to cascade the liquidity here and reach these lows. So they kind of got both of them boxed, if you know what I mean. So as of right now, again, this is a pivot that we called out. This right here is showing me a little bit more weakness as it relates to the opening range and its expansion. And if basically the 50% of this is taken out, I will pretty much lean to say that this cascading of liquidity is going to be likely. Back to being like more confident and bullish bias on S&P will basically be a break of this high. but Nasdaq is still in the show on the upside. I know most of you are probably looking at your own screens as well, but if you have any other feedback or things that you know that I can improve on, then let me know. I'm always down to hear that. So let's see if they cascade this liquidity. No, you didn't ask me anything. So there's that cascading effect right here. And then these are pretty much next. And that's going to create that 930 low SMT with NASDAQ. So there's that. See how that just happened on the next candle, like instantly? I don't know if you guys can hear me snap, but like that's literally right here what I'm talking about that cascading effect. You guys got to see that live. And notice how when this happened for that cascading effect, that's when NASDAQ also broke this pivot right here. That's something you guys will definitely want to watch in the recording, because that's something that when a developing trader doesn't necessarily understand or know when price is going to pick up on speed, that's a really good sign right there of when you can understand price will pick up that speed. Like look at this low, this low, this low, this low. They're all low resistance in nature, and you can see the price literally opens up here and immediately takes out liquidity. Something definitely you want to be aware of as a trader. You see a nice, beautiful pivot right there as well. 579. And if you guys do have some time, drop a 1 in the chat if you can now be comfortable in understanding what I mean when I say cascading of liquidity. It's literally this event we just saw right here. From here down to this low and these lows. Is that like when I first understood that, to me that was like a light bulb moment, and I really hope that that could be what someone else is also thinking and appreciating. First stage accumulation, market maker buy model. Look for a raid, or look for a breaker, look for a fair value gap. Those are 3 PD arrays that I personally like to see. Market maker models just requires a lot of reps. There's no other way for me to kind of say that. Just have to see a lot of reps. And the easiest way to see the reps is going onto a lower time frame, because there's going to be more in nature, because price is constantly moving in a market maker buy model or sell model. Like that program doesn't excuse me, that program does not stop. So these are pretty cool pivots. Like I said over here, these are some speed bumps, previous opening ranges. These are some speed bumps. And when there's like respect right here, and you see how we also noted ahead of time, like this is what I like mean by anticipating SMT, right? Like there's 930 low right here. We already knew this liquidity was going to get ran the moment that they cascaded liquidity here. And you can clearly see that Nasdaq was way more it's way more expansive in their opening ranges. So it's like when price hits this pivot right here and price raises liquidity right here, this is a short-term scalp that I personally like to see. But I would say that the highlight of the session so far in terms of insights is recognizing the speed bumps analogy here. Looking at the respect here on the pivots when you have SMT and this cascading effect right here. Those I would say are the largest takeaways. Also understanding when to potentially flip your bias. And just because, again, I favor bullish bias here, this is a bearish price signature that, and you can see here, that's your, like, the inversion fair value gap with a nice balanced price range. And when those get respected, typically you're going to look to run the liquidity. That's the 30-second opening ranges. You get it by leveling up inside of our Discord. All you have to do is basically type either in the chat for the live streams or inside of our indices channel or general chat or any other chat where you can be interactive. And once you basically interact for, I would say like a couple of days, you should be able to reach operative level 4. And that's when you can unlock the 30-second opening range. It doesn't require any subscription. You just get it by participating. All right, I'm gonna clean up these drawings right now because I feel like price is getting a little bit messy. But again, this is pretty awesome to see as a respect. And this was that SMT that we saw in the lows, so. Nice, Sir Aj. Nice. Anyone else have any questions? Appreciate you in Rapture. It's the same thing over and over. I really like go into your charts, look at time-based liquidity, put on the history, and tell me you don't see those signatures. It's the same stuff. course. And I still make mistakes too, guys. I'm not perfect. Please be understanding of that. Nobody is a perfect trader. You can still make a lot of money trading and still make mistakes. It's part of the game. It's just how you manage your risk. The best traders are the best risk managers. It's always the case. The better you are in managing risk, the closer you'll be to having longevity into this business. No problem, Les. Appreciate you, Iron John. Tony, did you catch anything? Just curious. You don't have to share if you don't want to. Just curious. All good. All good. I would say that the cleanest setup for me personally was right here. When you had that S&T protocol. This was a clean, very fast short on ES. And this was a very clean and fast long on Nasdaq. The opening range is the opening range. If someone took that, then great, they got paid. That's not always everyone's trading style. If that makes sense. We definitely want to annotate what looks to be something that you would want to take based off of some kind of understanding of your own protocol. And then the moment you can have that understood, then you'll see it more it'll jump out of your charts more often than not once you start annotating things that you like to see. I personally don't have a lot of experience trading the pre-market, but I do still know traders that do well with it, and I know a lot of people that also potentially get stopped out earlier. So if you are trading that pre-market, like 7 to 9, definitely toss on that developing RTH gap. That should definitely help you. So here's that high ram. I'm going to show you guys something that's pretty interesting and something that you can look at for your own studies, and then I'll probably end this session like this. All right. How do I want to annotate this? Do you guys rather see it alive, like not necessarily alive, but like on a past example of what I'm about to say, or would you rather me do one of those mock-up drawings? What do you think is more helpful? Okay. All right. Let's just take an example right here. So it can be any of these examples. It's a liquidity based understanding, right? So this is just like the cleanest one I can look at right now. A lot of traders that are in ICT, they like to target liquidity pools. What I mean by that is basically this low. Excuse me. And as a developing trader, most people will want to see basically price take out this liquidity and then look to retrace. There's going to be instances in price where you're going to basically see liquidity get taken, but it's not going to get necessarily taken and retrace. It's just going to be taken in expansion, right? how you manage a position is really, really important. So you guys can see another example here, right? Look at the difference between this right here and look at the difference between this. So you guys see how when this liquidity is taken, it then retraces, and this liquidity is taken and it expands, okay? Once you see this right here, same thing. This liquidity retraces, this liquidity expands. Same thing here. See this how this expands. What you'll notice about these examples in particular is understanding how to like manage a runner, okay? So when you can kind of see the differences between this, right? Like if you were to basically go short anywhere around here and then take profit here and price were to do that, like take profit at this low or just below it, then you would feel pretty good about managing that position, right? But in instances where price is going to go and they're going to raid this liquidity and not necessarily reverse, but they're going to actually run through it. So a raid and a run are two different things. When they run through the liquidity, it's going to be more of an expansion. When they basically an expansion here, expansion. And then when they go over here and they raid the liquidity, it's going to look to basically retrace. Let me know if you guys understand what I'm saying so far. Basically between raiding and running. Drop a 1 if this makes sense so far. So you guys can all see the difference between raiding and running, right? So this is going to be a position management idea that I like to employ, and it's up to you guys how you guys want to look at this on your own. And everything I'm about to say, of course, and this whole entire stream, it's not financial advice, it's my own opinion of how I view price, okay? And this is what I'll get into like a diagram. It's a little bit easier to explain now that you see the difference. So let's just go all the way up here and have a blank slate. So let's say price is going to basically just have some sort of liquidity here, right? And when price goes and raids this liquidity right here, it's going to look to retrace. So this is the raid example, right? And then if you have something like this, this is the run through example, right? So you guys can understand the difference between that, okay? Where's my initial drawing? I think I already deleted it. That's too bad, but I'm just going to take this example. And you guys can see here again, is this a raid or a run so far? It could turn out to be another, but the differences in what you guys see right now, it should still be a little bit different, right? So running it, right? Okay. So when you have an instance like this where it raids it, right? I personally like to look at price as it comes very, very close to this, right? So let's say price looks like this, right? You can see how they run through that. The candle that runs the liquidity is something you want to be very cognizant of, okay? In a raid example, the candle that runs the liquidity, it'll basically look to just get like taken out. And when it has, and I said that, I don't know if I said that correctly, I'm going to say it one more time. The candle that goes for the raid of liquidity, that's the candle I want to be monitoring, right? And the same thing for the candle that runs the liquidity. You'll notice on the candles that run for the liquidity, this candle's opening price to the low is going to be something where basically high frequency trading algorithms are going to want to look to trail their stops because they want to try to squeeze as much as they can out of the move and also just be looking to, let's call it clear risk in the opportunity to take on a new position, So in the instances that you're going to see price run through liquidity, the candles that run through liquidity, that candle's low to that candle's open, are going to be very, very important for price to basically continue the expansion. And you can see it right here. In the running examples, you'll see that these are going to want to be protected. See how this runs on liquidity? And see how then this is where trailed stops get basically ran out. Look right here. And this is where trailed stops like to get ran out. So when you manage a position, and again, this is your own understanding of price, not something that I'm ever recommending, but let's say that we have an example here. I'm just going to draw a box. I can just go like this. I don't know why I'm not, but and I want you guys to let me know if this makes sense or not. It's really important that you guys kind of give me live feedback here, because if not, then I'm not doing a good job explaining it, right? So let's say this is the liquidity again. Here, the candle that runs that liquidity this low to the opening price, right? This is going to be very, very important when price runs out liquidity. Does this get respected, or do they run through that and then they either chop or retrace? So this right here is a decision point. See what I'm trying to say? And when you look at it from a risk reward perspective, let's say someone goes potentially long right here, right? Let's say you have a 2-to-1 or 3-to-1, right? And when you look to target this liquidity pool, you're gonna, let's say, realize a 2.3, right? If you basically give up your position to wait for this candle to close and then look to trail it, you're basically playing with math. And what I mean by that is, let me ask you this question. Would you guys give up 30 cents to make $1? Like, that's the math equation that I basically look at and asking myself, like, here is my anticipated target, right? But when the order flow signatures present themselves here to say, okay, am I in a raid or a run condition based off of the candle that takes the liquidity? Sometimes I will literally go and say, okay, well, I don't necessarily want to take profit at this liquidity level, and I will be willing to give up 0.3 R of my position. Like, that's the difference. Let's just show you like this. Basically, what we're talking about is this distance right here. See this distance? So if I see that price is giving me signatures and it looks very, very, let's call it good, then, and it runs through that liquidity instead of raids through it, then there could be a higher target up here, or even let's call it here, where if this is a 2.3 and now this is a 3.16, you're basically having a position, if you guys can understand what I'm trying to say here, like this, based off of managing a runner. So if you can see order flow signatures present themselves, this is how you can squeeze more out of the move, by looking at higher targets and how price either raids or runs through the liquidity, with placing a understanding on the candle that runs the liquidity. So this is a kind of more advanced concept of looking at position management, but I want you guys to let me know if this kind of makes sense. And for the people that stuck around to the end, this is kind of like a hidden gem for you guys. So you guys just have to look and backtest this on your own and ask yourself if this makes sense to you based from like a math perspective, right? And when you have the ideas and understanding, okay, am I gonna raid or am I gonna run? And do I have the price signatures to support this type of, let's call it like, all we're doing here is understanding marginal cost versus marginal revenue, right? So like this is this decision right here. And it's sometimes you got to ask yourself, okay, well, instead of just exiting the full position right here at the time-based liquidity, does it make sense to basically have a marginal cost of, let's call it 0.3R, to then make additional liquidity pools, or let's say there's a fair value gap here, right? Like, that's something you gotta have to ask yourself. So when you look at raid versus run, this is something that I instinctively look at when I look at like operating on a position management perspective. There will still be instances that you'll see price, let's call it, go like this, doesn't reach your target that you're looking for when you employ this, and then go and stop you out here. Worst case scenario, you're losing 0.3R. If you do this, let's call it 3 times, but still able to squeeze a runner for the higher multiple, this is when you start to play with the understanding of your own numbers. And if I employ this strategy of position management, and I have given up minus 0.3, that's a terrible 3, wow, minus 0.3, and I do that minus 0.3, and then minus 0.3, but then another position that I take on is able to then squeeze out another 2. This is how you basically operate with your winners. So when I call it like squeezing more juice, this is what I instinctively look at. And this is natively taught in ICT price action model 4, position trading. And basically what he does is if there's an SMT that gets formed here, then that's going to basically be another understanding of I'm probably going to be in a raid condition versus a run. Okay. And in price action model 4 in ICT, he basically puts a sell stop. It's in a GBP example to go short. He puts a sell stop at the highest up close candle opening price that produces the SMT. So if you guys kind of understand a little bit more signatures now that I'm showing you, it's like if there is no SMT here and they're both correlated running up, I'm going to be more inclined to think of it as a run. If there is SMT at the time-based liquidity that I'm looking at, then that's going to show me with a little bit more understanding that it's probably going to be a raid. So these are some really big gems, and they're for you to discover on your own. And when you want to like basically say, oh, I had a beautiful position down here and I just targeted liquidity and it just ran through it, hopefully next time you'll understand this type of graphic and what it'll potentially mean in your trading in the future. So again, none of this is financial advice. At all times, you have to be understanding. I'm never telling you what to do with a position. This is what I personally look at in the markets when we approach liquidity pools. And when, again, there's conditions to present itself to basically say that correlated pairs are running through the liquidity and they don't display a crack when they run through the liquidity, then that's going to give me more of these confidence boosters to say, okay, well, then I want to give up 0.3R to just squeeze a little bit more out of the trade. And then accordingly, some people will, again, not necessarily just target this, but you can also start moving a trailed stop from not only here, but to here, or as price goes into this expansion, even here. And if you were to do that, you're still actually having positive expectancy relative to your risk. So not maybe like here, but let's call it here. So let's say from here to here, you still have a 1-to-1. So let's say you give up this and then price looks to break out this high. Like the moment you can do that, you're already squeezed out 1-to-1 of expectancy from just trailing a position. Instead of selling or taking profit here, now you're taking profit here. Let me know if this is insightful for you guys, and I can probably look to create another graphic of this later, but it stems from understanding this video from ICT, price action model 4 position trading. So when you look at the difference between raid and run, hopefully this makes a little bit more sense, and some of the confluences that you can say to yourself, okay, well, am I in the conditions for raid or run? And if I'm in the conditions for run, and I have algorithmic signatures that I can see that make more sense to me to do this, then giving up a 0.3 to make another 2 or another 1 is still in your favor. Awesome. Has anyone ever like came across something like this or understood this or have like can relate to having a very nice, let's call it trade pan out, and then you take profit too early? You're probably in a run condition. So I'll just give it a couple of minutes. I want this to kind of digest. And if you guys have any other questions that come up, then please let me know. But this is something that's really, really important, because this is just straight understanding on how you can actually trade less and squeeze out more. I see there's like 4 or 5 people that are giving feedback, but please let me know if you guys have any other points to understand this. And you can see this example here too. Like this is a really good one. You see how we still ran through that liquidity? And if you're basically taking profit here to basically anticipate a raid, right? You could also still trail up to this candle's low or close. And even if you get stopped out here, that's still, in theory, a couple points, maybe 2 or 3 points better than your initial exit. So you just have to kind of see the example of that. And like, here's another one, right? When there's a further distance away over here, then this is when you want to just go to a lower time frame and actually see this. So look, see how this is that 2 minute? So the 1 minute would actually be here. But this space here, like that's a little bit harder for me to substantiate. So you're going to have to just see on your own experience what that means to you. And I also know some people that'll just go like this, where you have liquidity here, and you see how that gets ran here. And then the moment that this gets ran here, this open or this low, that's to your own discretion. They might even start trailing again right here. This candle closes, they might trail here. This candle closes, they might trail here. So you're going to have to find your own experience and how you view this understanding. But in this example, again, over here, we did have SMT on that break. So like you see how right here, this candle that raids it, it was still lagging on S&P. And you can see here again, this candle's open or this low. This is trailed stop run. So hopefully that's clear to you guys. Pretty cool understanding, to say the least. And if you enjoyed that, then I'm happy to be able to share that. And it comes from the origination of price action model 4. Tony, that made me smile. Yeah, this is a great session. We did call out this as an S&T that was going to be predictable in that cascading effect. And I said that once we ran out this high, then I'd be a little bit more confident in the bullish bias on S&P. This retracement could have been an opportunity to then press higher. So good stuff. No problem, guys. I appreciate all the nice commentary. Yep. As we take less time to understand the more, let's call it like mechanical processes that I do, then we'll be able to also talk about just more experience things. And these are one of the experience things that you guys will see. And then it'll just start to jump off the charts at you. So like look, you have this right here, this liquidity, and it gets rated. And then you can basically look at this low to be trailed out. And even if you like get trailed out, you guys can see that re-entries is a whole nother thing that we can talk about later, but that's there's a fine line between like over managing and then also like over trading um, to be part of the same move. And that's still something that I struggle with personally. So yeah. Glad it was insightful. And I think that's gonna be it here. We were going on for basically an hour and a half, and hopefully OBS recording is all good. And yeah, that's what I got. No problem. And if you guys have any feedback on how I can improve and also provide like further insights to you guys, then let me know. I'm always willing to take constructive feedback. That's how we all grow as people. So I'm very open and receptive to that. So if you ever want to open a ticket or if you want to tag me in general chat, just feel free to do so. I like having these discussions. I mean, I exhausted a lot of the MMXM already on YouTube. Um, the only other thing that we could possibly do that probably hasn't been done so far is literally just do an entire lower time frame tape reading so you guys can see what my brain thinks about as it relates to market maker models. And it would have to be on a, unfortunately, and again, this might scare some people off, or they say that it's like nonsense, but like it would have to be on a seconds chart so you can just see so many reps. It would probably go through like 10 to 15 different market maker models in like an hour and a half. So it's all fractal. So even if the time frame is much lower and it has higher frequency, like it would still be the same insights in what I'd be looking at. Yeah, I'm thinking that that can be something that we can do in December. Specifically also because December is notably specifically for Forex, it's more of a consolidated month, and if the conditions present themselves, then market maker models and consolidations are typically one of my favorites, just because the offset accumulation, offset distribution protocol is like right on the money, if that makes sense. Like price isn't necessarily going to go further because when price runs out of an original, market maker model, then you kind of just have to submit to time to wait for like the reversal to happen post expansion. But during consolidated markets, the reversals happen much quicker and you get a lot more reps. So I don't know if that makes sense, but you should definitely be aware of that. Okay. All right. If anyone else has any other questions, please let me know. Happy to talk about it. Um, yeah, we got some awesome streams lined up. We have, I think, Trader Kira's streaming tomorrow. Let me check the events one more time. Yeah, Kira is tomorrow, and a sign time on Wednesday. And then we have the holiday on Thursday, and Friday's Black Friday. So be on the lookout for that. All right.